When the US sneezes, the emerging markets catch a cold. You may have heard that one before. Looking at what happens with the Federal Reserve as they increase interest rates, the dollar gets stronger. This has ramifications in other parts of the world. So we'll break that down today and I'll highlight what's happening with central banks. Of course, the FOMC meeting that everybody's patiently waiting for. And we look at other critical factors in the economy. Let's begin by taking a look here. Proportion of global central banks hiking. You can see that on the right hand side, it's almost towards 100%. It seems to be over 80% according to this, and most central banks are going in the same direction. We know that to be the case. One of those was quite a surprise. Sweden Central Bank launches 100 basis point rate hike, says inflation is too high. Now, when you look at some of these countries that had this negative interest rates or super low interest rate, to see a 100 basis point or a 1% hike is a significant change. So I'm interested to see what they do. Of course, they said, don't worry, don't get up in arms. This is probably the last one that we're going to see, or one of the last ones, but we really never know. All I'm just trying to highlight here is that all central banks are basically going in the same direction. Looking at this, what do you get when you've got interest rates rising with extremely high levels of debt? Well, this is one indication that total household debt surpasses $16 trillion in the second quarter of 2022. Mortgage, auto loan, and credit card balances increase. Now, none of this should surprise anybody, but that's the world we live in today. So I just wanted to highlight that as we move into the next one, which is more Americans are stuck with long-term credit card debt. This isn't people who use their credit card and at the end of the month they pay it back because they want to get the points, they want to get the air miles and all of that. No, these are people who cannot pay the bills, so they use the credit card to stretch things out. Now, I know for many people that have watched my channel, there are many responsible people out there with their credit cards. Credit cards can be a useful tool, but they can be very dangerous for those who are unwise with the spending habits. Now, obviously, people run into situations and everybody, runs into an emergency, but these are not the things to use for frivolous purchases. Let's look here. You could see that some 60% of credit card debtors owe credit card debt for more than 1 year or more. 1 in 4 respondents carry a balance to cover daily costs. So that just shows you that this is an extreme scenario where so many people today are using their credit card to pay for basic essentials. Basic essentials. And that shows you that you are right at the edge, because you wouldn't be using that to buy your food and you pay your bills and things. You're not going to do that because you're going to be paying 17+% interest as a result of that. So that's just the way it goes, okay? And I fear for a lot of people right now as we move into worsening conditions. Inflation is still too high, Bank of Canada says, amid softer data. The expectation, along with the Federal Reserve, along with others, is that this is the situation right now, but don't worry, it's going to change soon enough. Inflation is starting to come down. We won't have to do this for much longer. Just hang in there. Whether or not that's the case, we'll see. You could see the rate path. ECB is seen pausing rate hikes after February next year. That's kind of what the other central banks around the world have suggested, but we really never know. We'll see what happens with inflation, and we really have to understand that this is all a concerted effort by the central banks around the world. So we'll see how the actions take place. Okay, it's really key to understand that these things are not by accident. Okay, looking at the next one, it is coming out of Global Times. Okay, so this is a highly pro-China online publication that I bring to you occasionally to show their perspective, because we want to get all sides of the equation, of course. And this is something that everybody should understand, the history behind it, but I just want you to know the slant, okay? That's all. Each round of dollar appreciation in the past decades has been accompanied by extremely bad memories. The Latin American debt crisis broke out in the first round. Japan suffered from the lost 2 decades during the second round, and the Asian financial crisis took place during the third. Particularly in the Asian crisis, which is still fresh in many people's memories, More than 100 million middle-class people in Asia fell into poverty, according to the World Bank estimation. The strengthened dollar, time and time again, cuts the world like a sharp blade. And so what we see right now, as I just mentioned in the introduction, is that when the central bank, the Federal Reserve, increases interest rates, it strengthens the US dollar, at least against its peers. And this, as a result, creates an issue for other countries around the world. Other central banks, I remember this specifically when they were starting to engage in their policies, and they were talking a lot. I believe this was during the Janet Yellen days, and they were saying, please stop this. You can't do this. You're going to hurt us. Don't increase interest rates. We're in big trouble. And that was literally central bankers around the world saying this. And I brought that to you in previous videos. And it just shows you how powerful, number one, the US dollar is, but also the Federal Reserve. They really are the head of the snake when you think of it like that. So that's just one factor that I wanted to bring to you. And I wanted to also highlight something right now. As you watch this video, there is something going on that I need your help with, and that is this tweet. Patrick David from Valuetainment said, "Who would you like to see as a guest on the PBD podcast?" And I happen to volunteer myself here. But what I need from you is the very first thing in the description. That's the tweet itself. If you click there and just click that like button and maybe even comment on it, I want to generate a lot of activity for this. So that the people from Valuetainment or the PBD podcast will be able to see it. I really do appreciate that. I really would love it if you could please do that. Literally take 10 seconds right now, go down below, even as I'm talking right here, click on that tweet, go over there, just hit that like button, and maybe just comment if you don't mind. I would really appreciate that. 10 seconds. Thank you very much. Now, let's go here, and you can see I bring this to you frequently, and that is the GDP now. So GDP now is kind of like a forecast coming out of the Federal Reserve, what they believe the GDP is going to be. It's not official or anything, it's just kind of a forecast, and that is now down even further to 0.3%. So should this go into negative territory, we have a third quarter of negative. Are they going to count it as a recession? If 3, who knows? But anyway, that's where we go because of inflation, because of so many other factors. Not looking too strong. I'll tell you that, just something that they don't want to acknowledge. But anyway, the euro area is going into deep recession. German data on manufacturing orders show deep declines from within Germany, that's the blue, and the eurozone, that's the red line, while orders from the rest of the world are holding up, that's the black line. The last data point is for July before Nord Stream got shut off. So this might not look so good in the following data that we get after this. But the point here is that Europe is in the worst position globally as far as I'm concerned, okay? Really big economy when you think about it, various countries, all this, but it's looking really weak right now, particularly because of what's happening with energy. Here we have German utilities close to long-term LNG deals with Qatar. The thing that's interesting about this is that they said, yes, we are going to set up this deal. We're going to make it happen. But when you read into the article, they mentioned something very key, and that is it's not going to be set up until 2026. So the actual thing happening is still several years away. So that just shows you that the energy crisis for right now is not going to be resolved by Qatar. I can tell you that much. Looking at this, you could see fuel shortages to come next week at many petrol stations in Hungary. So we're noticing this all around the world. I just wanted to give you an idea that this is global. If you are from Hungary, please let me know. Put it in the comments below, okay? I know I got people all over the world, and we need to share this information, okay? And by the way, if you're from another country around the world and you know of something, put that in the comments, please. Amazon spends the construction of new logistics centers in Spain until 2024. Of course, with everything else that's been going on, this has really come down. And you notice that a company that was expanding at the fastest rate beyond any other company during 2020. While everything was shutting down, Amazon was hiring something like 400,000 workers. They were expanding their fulfillment centers by 50% in 1 year. I mean, they did an extreme expansion, but now things are really cooling off. So that shows you, is it the consumer demand, or did they get ahead of themselves? So that's kind of the debate right now. Some millennials and Gen Zers are closing investment accounts over inflation. Now, this is happening at this time. I just wanted to bring that to you because, things were so hot and now it's really not. Does that mean that people lost a lot of money? Or are they trying to conserve and say, I better not get into this stuff. I'm really just a gambler. I'm really just, at the casino, but I don't want to let anybody know that. Anyway, that's the story there. And then we have this Gap eliminating about 500 corporate jobs as sales fall. So we see this all around the world, the contagion that's been happening, the economic slowdown. Are we in a recession or not? It really depends on what data you're willing to look at. The government's probably not going to highlight that, and if they do, just like in 2020, they're going to say it happened for 3 weeks, and that's the end of the story. But you, the individual, you need to take this all in. Understand that when the US dollar strengthens, this has an impact on the other countries around the world. Now that, of course, if those countries have a problem, it reverberates back into the United States as well, because maybe they're not going to be able to import as much. Maybe they're not going to be able to take as much in, and that's going to affect the export. That affects the GDP, and there's this cycle that occurs. There's always going to be this happening, and all I say to you is that you got to get your stuff in order, your personal finances in order, and everything that you're trying to do as an individual. Right now is the time, 2022. Do not wait until 2023, okay? You got to get this in order financially. Of course, your preparation's made. I'll see you on the next one. Take care.